Everyone, it's Nick with Us versus Herd. I want to talk about FedEx because honestly, in this market, you don't see a stock doing what it's doing right now. I'm going to cover the charts. I'm going to cover, kind of what the catalyst was and what I am looking for some entry positions on FedEx. So let's take a look at why the stock is ripping. What was the catalyst? They did have earnings today, and basically they raised guidance, and they're getting used to actually operating with inflation. So there was good news. They forecast profit over the next year above Wall Street's expectation. So they're raising guidance. The CEO came on. He was very confident that they have everything under control, gave confidence to investors. Dividend is up. They got some upgrades today from JP Morgan. I'm not going to go through the whole earnings right now, but you can kind of check it out. If you want to do. It says guidance cleared near-term expectations, particularly considering recent network disruption, cost headwinds, and macro uncertainty. So I think, kind of like what I was saying, I think that the CEO came in and he really just gave that confidence to investors and raising that outlook versus other companies right now in different sectors are saying we don't have guidance. We don't know what guidance is. We're not issuing guidance. But FedEx came out of one of the only stocks that are saying, hey, this is the guidance. This is what we're doing. We're raising guidance. And, obviously investors are starting to look like that. But looking at the chart before earnings, so let's kind of zoom in what's happening here, and we'll compare it to SPY and QQQ and some of the other stocks. But, a couple weeks ago, FedEx tapped 200, which was kind of bottoming out down here, which this tapped back in, May? So May tapped down in May around 200. So it was tapping around here also early May. It just really it was holding this support right down here, right? And then a couple weeks ago, when the market fell apart, this thing tanked. But then literally the next day, it started skyrocketing. Now, the one thing that I want to say about this stock is, if we kind of zoom out over the last year, sure, it went from 300 to 192, which is pretty bad, but not as bad compared to some of these other stocks, right? Or even compared to UPS, which we'll take a look at. But one of the things in terms of FedEx is in this market, before earnings, this is the 50-day moving average here. It crossed over the 50-day moving average. The white line here is the 100-day moving average. And then it was trying, this purple line here is a 200-day moving average. It was trying to cross over the 200-day and it kept getting rejected until, today's catalyst. It got an upgrade from JP Morgan. And my thing is, there's not a lot of stocks right now trading over the 200-day moving average. And I think this is incredible in terms of, what the market's looking for. Obviously, we're not the only ones looking at this. Algos are looking at this. Investors are looking at this. I'm probably sure I'm not the only person making videos on this. But I think it's pretty amazing that during this, possible recessionary period and everything's going haywire and inflation is crazy and, everyone, retailers are a mess. FedEx says they have everything under control. They're expected to make more money than ever and everything's going to be good, right? Now, whether that happens or not is one thing. Most companies are not going to issue higher guidance if they're not confident, because then they're raising expectations for themselves in the next quarter to hit those benchmarks. Sure, in Q4, obviously you're going to have the holidays coming up, and we're going to see what spending and retail spending is like that, especially when you're trying to ship stuff, whether through a retailer or shipping something to a family member. Obviously that's their busy season is in the last quarter of the year. So I think it's gonna be interesting here. I think I really like the confidence that FedEx came out today, and I really like that the stock is trading above one of the only stocks right now, in my mind, that's actually liquid enough that is trading over the 200-day moving average. Let's take a look at UPS. For an entry, before looking at UPS, for an entry, kind of what I'm looking for is I would like it to take a little bit of dip. If it could hold the 200-day as support, if the 200-day can form a support versus a resistance, as here we saw a resistance, if it could form support and kind of push off this would be amazing. Now, there's a opportunity here that it may not actually come back down. It could skyrocket to 250, 260, where we have some resistance up in here. But that's the chance you're going to have to take, for yourself, or if you're trying to invest in the stock. For me, I would like a little bit of pullback. I don't necessarily like buying this like into a Friday over the weekend. Who knows what next week is going to bring, but I would like it to form some support above the 200-day moving average, and then, start trying to get some entries in on the stock. UPS, looking at UPS here as a competitor, the 200-day moving average is at 198. So, it's not like crazy far off, but it is pretty far off. They're doing good today. UPS right now is up $4, up 2.5%, but nowhere near what FedEx is, right? And UPS had earnings, what is this, April? So they had earnings back in April, and it's done nothing but drop, and it's actually it's a little bit lower than where it was on earnings, but almost the same price, right? So since last earnings, they actually haven't done anything, but it has crossed over the 50-day moving average. So it's going to be kind of interesting to see here, like, is UPS going to follow through? Is it lagging behind? Like, kind of what's going on here? I don't want to buy this unless it's over the 200-day moving average. And that's what I like about FedEx. FedEx over the 200-day moving average, UPS is not. If you're looking over at the overall market, we'll pull up SPY. SPY, is very, very far from the 200-day moving average. And that's why I say, like, there's not a lot of stocks out there right now that are meeting the criteria to potentially go long. Like, do you want to go long down here in SPY? For me, probably not. I'm just going to take it easy. Sure, you can dollar cost average or whatever you want to do. But, for me, I'm kind of waiting for some of this inflation to blow over. Or if companies like FedEx start coming out and saying, hey, everything's under control. There's not going to be layoffs happening. There's not going to be cost headwinds. But so far, there's been nothing but bad news, especially out of like Walmart, Target, all those kind of, the retail sector is an entire mess. But logistics looks like FedEx is trying to get it together. UPS, I don't know what UPS is doing, but I think it's going to be interesting. I think it's going to be very, very interesting. Sure, we're having a great day here in the markets. It was a great day, a great week for the markets for the most part. But we fell apart last week. Or not last week. Was it last week? 2 weeks ago? 2 weeks ago. So 6.9, 6.10. So that's about 2 weeks ago now. We just been dropping like a rock, and now we're having a little bit of recovery. So the question is this kind of like a bear market rally, dead cat bounce, or are we actually going to go somewhere? And like I said, what I want to see, more companies issuing guidance like FedEx and confident that they can move through this inflationary period, and that, because FedEx has its own logistics problems. Especially with oil skyrocketing and all of this. Oil today, right now is up $4, 108, right? So they have their own issues. FedEx is not like a safe haven, I would say, or special. They're exposed to all the U.S. consumer in terms of packages being sent, especially through retail. If retail spending is down, it's going to impact FedEx. If oil is continuing to skyrocket, that's going to impact FedEx and gas prices and all this. So, it's going to be interesting to see. What I would like to see again, if it could hold here, pull back a little bit, hold above the 200-day, build the base, start averaging in, and use that 200-day as a guide here, and that's what I'm looking for. So if this video is useful to you, leave a comment below. As always, stay safe, stay green. It's us first, sir.